Now let's talk about what accrued expenses are and why they require adjusting entries at the end of the accounting period. So accrued expenses are just expenses that have been incurred or generated but not yet paid. So remember the definition of the word accrued. All accrued means is something has accumulated but has not yet been paid. In this case, it's an expense that has accumulated but has not yet been paid. And it will result in a liability since it has not been paid. So, what are some examples? The two main examples we'll be talking about are salaries payable. At the end of the accounting period, these are salaries that are owed but have not yet been paid because the end of the accounting period is not a payday usually. And the other one is interest payable. So at the end of the accounting period, you will likely owe some interest, but it has not yet been paid because the end of the accounting period usually does not fall on the exact day that you will be paying a liability. And accrued expenses are the opposite of prepaid expenses. Remember, prepaid expenses like prepaid insurance and prepaid rent and office supplies, those have already been paid. But accrued expenses are just expenses that have accumulated but have not yet been paid. So before the financial statements are created, which means at the end of the accounting period, accountants must calculate the amount of expenses that have been incurred. In other words, the amount of expenses that have accumulated but have not yet been paid. And then they need to record the adjusting journal entry to update the accounting records.